Good afternoon, everyone. We're going to get started in just a minute or so. We want to just give a little bit more time for other folks to join. So thank you for your patience. Okay, well, we're at about 3 minutes after, so let's go ahead and get started. I don't want to tie you guys up for longer than necessary. Welcome. My name is Megan Harris. I'm the program administrator here at GSFA, and I just want to thank you all for taking time out of your day to learn about the program and how GSFA can help you realize the dream of homeownership through our Assist to Own down payment assistance program. Before we jump in, I do want to cover a couple housekeeping items. First and foremost, this is going to be a general overview that will help you understand the basic concepts of the program, how it can help, how to get started, and what the details and parameters are of the program. One thing you'll want to do is reach out to one of our participating lenders if you have specific questions about interest rates, APRs, and other details that may apply to you specifically. I will be sending out a copy of the slides to those of you who were able to attend today, and the slides will go out within about 24 hours or so, maybe 1 to 2 business days, just depending on the timeline there, but keep an eye out for the available slide deck from the presentation today that you'll be able to refer back to. A recording will also be available on your county resources website for the GSFA program. So if you'd like to revisit any portion of the recording today, that'll be available to you as well. Again, that'll probably be within a couple business days. We will have a Q&A session at the end of the content portion. And to ask questions, you'll want to click on that Q&A icon on your webinar toolbar. If you click on Q&A, it'll open up a dialog box, and I will be able to see your question or feedback there. And I will answer the questions again at the end of the content in the order they come in the Q&A box. Your chat function is disabled as well as your mics being muted. So you want to make sure any questions you have are entered into that box. Also, I want to ask that everyone do their best to limit distractions because a lot of times the questions that come through are going to be answered organically as we move through the content. So with that said, let's go ahead and get started. So if you're not familiar with GSFA, also Golden State Finance Authority, one and the same, we're a housing finance agency, and our primary mission is to make home ownership a more realistic possibility for more Californians. And we do that primarily through taking ordinary mortgage loans and enhancing them with down payment and closing cost assistance. And so far, we've provided over $685 million in assistance to over 87,100 home buyers. And there's a reason we care so much about home ownership because it's more than just the American dream, right? We want to make that a reality because home ownership has been proven to have a positive impact on families and communities. It improves stability in neighborhoods, educational achievement, civic engagement, and even has been known to improve the physical and psychological health of folks as well. And it can also correlate to crime reduction. So if you take a second to imagine if everyone in your neighborhood or your community was a homeowner, right? The likelihood of crime going down is extremely high because folks actually have a tangible investment in their community, right? And they're more likely to care about that investment and protect it accordingly. So we're going to see crime rates go down as a result. And then according to the Federal Reserve 2022 Survey of Consumer Finances, we have to factor in that financial benefit, right? If you talk to someone who is wealthy, for example, 9.9 times out of 10, they probably own real estate. And we can't even have a conversation about wealth really without also factoring in real estate ownership. And so if we break that into dollars and cents, the average homeowner has a net worth of somewhere in the neighborhood of $396,000, whereas the average non-homeowner may have a net worth somewhere in the neighborhood of around $10,400, right? So big difference there. And we want to be able to allow you to use this program so it can make a difference for you. Now, when it comes to homeownership and people's reasons for not owning a home yet, those reasons are vast and nuanced, right? Not everybody has the same situation. However, no matter what circumstance there might be, right, holding you back from home ownership, the number one reason why more people don't own a home is because they just don't have that upfront money for the down payment and closing costs. And then again, when we live in California, we are already probably on the higher end of cost of living from a national perspective. So 9 times out of 10, we're more than likely paying a mortgage size rent, right? We're just not actually paying that mortgage. And a lot of times people have that difficulty getting to the point where they feel comfortable making the initial investment on a down payment, as well as the closing costs for a home purchase. Now, there is a misconception out there that you need 20% to purchase a home, right? 20% as a down payment, and that's not true. In fact, the lowest down payment you could come in with is about 3%. And that's where the GSFA Assist to Own program comes into play, because we can provide you with enough assistance to close that distance on that 3% down payment that you need, right? That's basically going to be considered your money. So again, the Assist to Own Down Payment Assistance Program is going to be available to employees of Yuba County. And if you have any friends or family members that are also county workers and they just so happen to be employed by one of the counties highlighted in orange here on this map, then they can also apply for the Assist to Own program. But we're going to focus on Yuba because that's who we are here to help today. And the assistance provides up to 5.5% that can be applied to your down payment or closing costs or any combination thereof. And you don't have to have perfect credit to qualify for the program, nor do you have to be a first-time home buyer. So even if you already own a home, or maybe you owned a home in the past, or you might be on title or a co-signer for someone else's home, you can still use this program to help purchase a new or future primary residence for yourself. So that's the main criteria there. You have to own or occupy the property you purchase through this program as your primary residence. And even though you do have to be a County of Yuba employee, you can actually purchase a property anywhere in the state of California, again, as long as you live there as your primary residence. We've got a lot of folks working remotely nowadays. And so even though you work for Yuba County, you might live in Nevada County or Sonoma County or Sacramento County, right? And so again, we're not limiting the geographic location of the property you purchase. You just want to make sure that that property is purchased in California, right? That it's located in California. And then again, that you live there as your primary residence. Also, if you already own a home, maybe you're not interested in buying a new one, but you want to refinance, that's also an option under this program. So really quick, I just want to give an example of the difference the assistance can make for you. And this example involves the purchase price of a home that is $862,953. And we're going to use an FHA loan in this example. And FHA is one of the many loan types that are available through using the Assist to Own program. Now with FHA, you need a minimum down payment of 3.5%, and that is equal to 3.5% of the purchase price. And what that works out to is $30,203. And so the balance on the mortgage loan in that case would not only include the difference between the purchase price and the down payment, but also the upfront mortgage insurance premium that is required with an FHA loan. And again, I'm going to be using some terminology here describing loan types and whatnot. And for specific information and details on that, you definitely want to connect with one of our participating lenders who can break all that down for you. So Long story short, we've got a loan to value of 95 or 96.5%. And loan to value, again, is just the difference between your purchase price and the amount that you put down. Okay. And so the total amount here is going to be 847, 323. Now, if you were to get 5% in assistance from our program, it would be equal to 5% of your total first mortgage loan amount. So I want to make sure everybody understands the basis of the assistance on this program is calculated on your total first mortgage loan amount, not your purchase price, right? So you would get up to 5% of your total first mortgage loan amount, which would bring you to $42,366 in assistance. Imagine what someone could do with $42,366, right? Well, in this example, that covers the entire down payment to purchase this home and allows you to have an additional $12,163 left over that you could apply towards closing costs. And closing costs are those sneaky expenses that a lot of people don't anticipate when they're buying a home, right? A lot of folks, when they buy a home, they're thinking down payment, right? But surprise, there's closing costs, which are just basic additional fees that are always associated with a home purchase, very typical for any given purchase transaction. And so the beauty of this program is that it gives you the opportunity to have enough money for your down payment and your closing costs without necessarily having to break your own bank for it. And this is another example using the median home price for a home purchase in Yuba County, which is $415,000. That's about the median price there. And the figures here are a little bit smaller, but the impact is the same. So when it comes to what you can use the assistance for, we don't actually tell you how to divide it up. You and your lender can apply the assistance towards your transaction in the way that makes the most sense, as long as it's applied towards an eligible expense. So eligible expenses include your down payment, your closing costs, or even paying down the principal balance on your first mortgage loan. So if we take that $862,000 home we just saw a couple slides ago, and then you get a gift from your family member, for example, of $5,000, and maybe you have your own cash saved up, right? $10,000. And on top of that, you get the assistance from the program over $42,000, right? That increases the down payment you have, which is going to make the remaining balance on that first mortgage loan lower from the outset, which means you're going to be paying back less money over time. And if I didn't say this already, there's no minimum or maximum contribution required from you as a home buyer using this program. You can put in as little to as much of your own money into the transaction as you'd like, or no money at all. In some cases, it's not uncommon for people to come in with none of their own money. And that's whether you have money or not, right? Maybe you just don't feel comfortable investing your nest egg up front, right? For a home purchase, you'd like to kind of keep that safety net for yourself as you embark on this home ownership journey. So just want to make sure everybody's clear on what that's going to look like. Also, if you get a gift from a family member or other eligible source, that is also a possibility. It's not uncommon for lenders and realtors and sellers to provide credits to home buyers to help make the process and the transaction a bit more affordable. So those are typical credits that are not going to be a problem or limit your ability to still access assistance from this program. So let's get into the structure of the assistance and how everything is set up. The primary assistance you'll receive is going to be equal to 3.5% of your first mortgage loan amount. And the 3.5% assistance is going to be provided as a deferred second mortgage loan. A deferred second mortgage is simply a mortgage that has no monthly payment, and it also has no interest rate. So that means you're paying a zero interest, no monthly payment second mortgage loan. It's simply going to be due and payable whenever you sell your property, refinance, or in 30 years, whichever comes first, or in any event where your first mortgage loan is paid off. There's no equity appreciation share, meaning, as your property accumulates value over time, you don't have to share any of that value with us. It's simply going to be whatever the amount was that we gave you, right? That 3.5% of your first mortgage loan would be what you would pay back. Okay. In addition to that second mortgage portion of assistance, there is also a gift available that goes up to a maximum of 2%. And again, that's going to be equal to 2% of your first mortgage loan. The gift portion of assistance is immediately forgiven after close of escrow, and you never have to pay that back. It's also not taxable. We don't report the gift assistance to the IRS, so you don't have to worry about paying any taxes on that as well. Now, when it comes to occupancy and property guidelines, as I mentioned before, even though you do have to be a Yuba County employee in order to take advantage of this program, you can actually purchase a property anywhere in the state of California as long as you live there as your primary residence. Now, the property types that you can purchase are also varied, right? So you can do 1 to 4 units, which is great. For those of you who aren't familiar with units, take a duplex, for example, that can house 2 different families. That's considered a 2-unit property. Then we've got a triplex, right? That's a 3-unit property, and then up to 4, right? So that's a 4-unit property, which is what a lot of people would call a fourplex. So you can purchase a property 1 to 4 units, live in one of the units, rent out the rest of the units, right? And use the rental income on those units to fund your first mortgage loan. Okay, that's not uncommon for people to do. And then also, if that's not where you're at, not what you want to do, you can also purchase a condo. You can purchase a home in a planned unit development, which is, those communities that are typically built by the same builder. Maybe they all look alike or look similar, right? But they all have the same builder. And there's homeowner association dues that are required by the builder, right, to maintain that upkeep of the community. So those are options, as well as manufactured homes, which tend to be on the more affordable end of home ownership, because manufactured homes are actually assembled in a factory and then actually placed on a foundation of a plot of land. Right. And so because of that construction type, it allows you to save some money there on the home purchase, but they're super viable. In most cases, they're just like an ordinary single family home. The properties that you can't purchase through the program are going to be co-ops, investment, vacation, and second homes. Okay, so keep that in mind. Now, when it comes to the mortgage loans, again, GSFA governs the first mortgage loan type as well as the interest rate. Okay, so we set the interest rate for the mortgage loans on the program. The interest rates tend to be at or below market, which means they're going to be a little more affordable than what you would get from a regular mortgage loan out here in the market. And that's one of the great things I want to point out about the program is that when you are using this program, you don't have to worry about shopping for the best rate because we're already providing that. At this point, you're just going to be shopping for the best lender, right? Who can provide you with the best level of customer service. So we set the interest rates for that first mortgage loan, so you don't have to worry about shopping around for the best rate. When it comes to the loan types that we have available under the program, for government loans, we have FHA, VA, USDA, and HUD 184 loans. HUD 184 loans are specifically available to federally recognized tribe members who want to purchase a home on tribal land. There are lenders that specialize in those loan types. So if you're one of those folks, you definitely want to reach out to one of our participating lenders who can provide that specific loan type for you. But when you're using a government loan under the program, you will be limited to a purchase transaction. And then the conventional loan option we have available is through Freddie Mac, HFA Advantage, and that's where you can do a purchase or a refinance if you're already a homeowner, or if later you want to refinance after you buy the home, you can do that as well. And I just want to point out that all of the interest rates on the first mortgage loans are 30-year fixed interest rates. When it comes to the maximum first mortgage loan amount, the max base loan amount on that first mortgage is going to be capped at $832,750. Now, we saw a couple of slides ago where the loan amount actually went up to $847,000 and change because it included the upfront mortgage insurance premium on an FHA loan. And with a VA loan, if you are familiar with VA or you are a veteran and you qualify for a VA mortgage loan, there's an upfront funding fee that can be financed into the mortgage. But you just want to make sure that the base loan amount does not exceed the $832.50. And the base loan amount is simply the difference between the purchase price and your down payment. Now, your lender will go over what loan type is going to be the best fit for you. Again, that's going to be a conversation you have with your loan officer, and they can help you decide which one is going to work the best based on your situation. Now, even though we do have a max loan limit, we do not have a max purchase price. So as long as you can make up the difference between what the assistance won't cover, your first mortgage loan amount, and the purchase price, you won't have any problems. You can still use our program. We don't care how high the purchase price is on your property as long as you can make up the difference. I do want to say that with certain loan types, there will be different loan limits than what we have. For example, FHA may have a lower loan limit in Yuba County than we do, right? And so if FHA's loan limit is lower than ours and you're using FHA financing, then you would need to defer to FHA's limit as your loan limit maximum. There are going to be cases where FHA's loan limit or any other loan type, it has a higher loan limit than what we offer. And in that case, you would adhere to our maximum, the $832,750. So getting into the credit score and debt to income ratio requirements, the minimum credit score to qualify is going to be 640 unless you are using a HUD 184 loan. That's where you need a 660 credit score minimum. The maximum debt to income ratio, and before we jump into that, I would want to emphasize, for those of you who aren't familiar with what a debt to income ratio is, that's simply the metric a lender or bank uses to measure your gross income, your monthly gross income against your monthly debt, right? And from there, they can determine how much capacity you have to take on more debt in the form of a mortgage loan, okay? And so on a government loan, the max debt to income ratio, actually on the whole program, the max debt to income ratio is 50%, unless your credit score is below 680 on a government. In that case, you would be capped at a 45% debt to income ratio. On conventional loans, if you're refinancing and your credit score is lower than 680, you would also be capped at a 45% debt to income ratio. Generally, you're going to be able to go up to 50% rather on your debt to income ratio, provided your credit score is 680 or higher. Now, when it comes to income limits, this is a really popular question we get. People want to know, do they make enough money? Do they make too much money to use the program? And the answer to that is it depends, okay? So first and foremost, your loan type is going to dictate what, if any, loan income limit applies. Okay, so FHA and VA loans, for example, do not have an income limit. So if you're using FHA or VA financing, you don't have to worry about your income being too high. On USDA loans, they are very particular. USDA governs their own income limits under that loan type. And so if you are using a USDA loan to purchase a home in a rural area, USDA will tell you and your lender what that income limit is, and you would make sure you meet that requirement accordingly. Now, conventional loans, we do set income limits for, and they're actually a lot more flexible than most people might think. For example, in Yuba and Sutter counties, the current income limit is $196,560. So that means all of the income that you're using on your loan application to apply for the mortgage loan would have to be at or below $196,560 to qualify for the program using conventional loan financing. In Sacramento County, the limit is $218,700, and these limits typically change in the summertime every year. And so we probably will be updating these limits in the next couple months or so. So you might see those numbers change. Now, people who are at or below 80% of the area median income are typically going to see lower interest rates on their mortgage loans and higher assistance options. And again, that's gonna only apply to conventional loans because conventional loans are the only loan type we have where the income limits apply. So I know I just covered a lot of information and you might have tons of questions about how this can work for you. And that's where you want to reach out to one of our participating lenders. All of our participating lenders have been approved to use the program by GSFA. They're experienced with our programs. They're going to help you understand the guidelines, provide you with interest rates, APRs, and other details to help you decide if this is going to be the right fit for you. They're going to go through the down payment assistance options and process your application for you, as well as the entire loan process. It's all handled by the lender. So there's never going to be a point where you need to work with us or reach out to us for anything. Okay. It's going to be like you're applying for an ordinary mortgage. You're going to work directly with your lender, and they're going to take you through the entire process from beginning to end. So there's no extra classes or any extra paperwork or anything like that that you need to fill out with us here at GSFA. So your first move, if you're interested in the program, is to head over to our website. You can actually use this little QR code that'll take you straight to your county resources website for GSFA programs. Look up the participating lenders and go from there. Now, I will say when it comes to choosing a participating lender, because they all have the same interest rates to work with, you really want to focus on customer service, right? How experienced is that lender? How responsive are they to your questions, right? Are they available when you need that proactive communication, or you have additional questions or concerns that you want to go over? How knowledgeable are they about this program? And so those are the kinds of things you want to be looking out for when you're selecting a participating lender. We do have a considerably long list of participating lenders to choose from. It's not important where they are located in most cases, right? The vast majority of mortgage loans are transacted virtually. So there's probably going to be a very slim to none chance that you're actually going to meet with your lender first face to face. Okay, so that's why, again, I want to make sure everyone's more focused on the quality of the customer service they get rather than the location of the lender when you are looking to work with a lender from the program. And if we have time, I will walk you through the process on how to locate a participating lender. That being said, not everybody's going to be in a position to purchase a home today for whatever reason, right? We all have our own timelines, specific circumstances, et cetera, and so forth. But if your reason for not purchasing a home right now is because you just don't have enough money for the down payment or closing costs, or maybe you have the money, but you just don't feel comfortable investing it right now, okay, then you want to also consider the opportunity cost of not purchasing a home now, right? Because this program is literally going to put the money in your hand to be able to do that. And so when we talk about opportunity costs, we provided an example here for you to kind of walk you through that. So if we take that $862,000 purchase price we looked at a few slides ago and the required down payment of over $30,000, and you decide, oh, I don't know, I think right now I just kind of want to see how things go and save up money on my own until I'm ready, right? Well, if you take $500 a month, okay, to set aside for that down payment, it can take you over 5 years to save that $30,000, right? Now, had you used the program instead, in that same 5 year period, your property could have accumulated over $151,000 in value, which is essentially your money, right? And as we can see, that's considerably more than what we have tried to save over the same 5-year period for a down payment. Also, keep in mind the housing market is a moving target, right? The price points, the inventory, what we're looking at, 5 years from now is not going to be the same as it was today, right? If we look at 5 years ago in 2021, home prices were different, interest rates were different, inventory was different, right? So these are all factors that we want to take into consideration when we're trying to determine if now is the right time. So again, if down payment and closing costs is your reason for not purchasing a home right now, definitely take that into consideration. Now, when it comes to how fabulous this program is, you don't have to take my word for it. We actually have a series on our YouTube channel that chronicles the journey that people have had in using our program to purchase a home. It's called Journey to Home Ownership. And this is where you get to see real live testimonies of real people who have used the program, and you can kind of get a firsthand account of what that was like for them. So once again, I want to thank everybody for your time. That concludes our presentation. If you have any questions, feel free to go ahead and drop those in the Q&A box. And let's see. If you don't have any questions, you are not required to stay on the call. For those of you who are interested, I do want to walk you through how to find a participating lender. So I just clicked on the link to our website that was in the slide, gsfahome.org. Okay, so this is what it's going to look like when you get here. Now, if we put our cursor on business resources and then there's find a lender on that menu that pops up, if you click on participating lenders, it's going to bring you to the participating lenders page. So this first tab here, participating lenders, gives you all the lenders that are participating in our programs. And it's a very long list. If you're already working with a lender to purchase a home, you may want to peruse this list to see if your lender's company is represented here. You also want to check for the X that's marked under GSFA Platinum. Okay, the GSFA Platinum program is where the Assist to Own product lives. So as long as your lender has access to the Platinum program, and you'll know that if they have an X marked here, they can also help you with the Assist to Own program. The other program we have here is Golden Opportunities. Not every lender has access to both. So again, I would make sure you're paying attention to that X they have marked under GSFA Platinum. Now, the one thing about this list is that it's very general, okay? It gives you the name of the lender and then their website. You would click on that little globe to get to their website and access some contact information. I will say that not everybody there is trained on the program, right? Not every single loan officer at Academy Mortgage is an experienced or knowledgeable loan officer when it comes to this program. So if you do end up using that method to locate a participating loan officer or lender, you want to make sure whoever answers the phone, you ask them to speak with someone who has experience with the GSFA Platinum program. Okay, that's what you're looking for. Now, if you want to get more specific, you can use this branch locations by county tab. That's where you get to pick a county from the drop down. And again, location of your lender is usually not important, but if for whatever reason it is to you, you can use this option. And say, for example, we click on Yuba from the drop down, it gives us just a couple of options. The only downside to this list is that it doesn't tell you if they're participating in the Platinum program or not. So you would have to notate the name, click on participating lenders, and cross-reference that here to see if they have an X marked under that Platinum option. But on the plus side, again, not only is the company going to be local to you, but you also get a direct phone number as well as an address of the branch that is available to you locally. And then finally, we have the top loan officers list. This is a list of loan officers who are guaranteed to be trained on the program, have experience with using it, and have a high performance when it comes to using this program. And so you get a name, you get the name of their company, you get their phone number and their website, even their license number, what counties they focus on, and the languages they speak. So this is a great opportunity, especially for those of us who are bilingual and want to communicate in a native language, right? But really just to be able to identify someone quickly who can help you with the program. Okay, so those folks are listed here. So getting to some questions. First question, do you offer 15 years as well? Unfortunately, no, we do not have any 15-year first mortgage loans. They're all going to be 30-year fixed rates. Question, what is the Golden Opportunities Program? That is another program totally separate from GSFA Platinum and Assist to Own. Golden Opportunities Program also provides assistance in the form of a second mortgage and a gift. However, the second mortgage portion has a monthly payment as well as an interest rate. And there's some other limitations with that program that make it a little bit different than Platinum. The interest rates, for example, are higher on that. The property types are more limited. But if you are someone who doesn't have a 640 credit score right now, maybe your credit score is 620, right? And you would still like to purchase a home, right now, you can use the Golden Opportunities Program potentially because it has a more relaxed credit criteria. So if that's where you're at, right, you want to use the Golden Opportunities because your credit score isn't quite 640 yet, but you're ready to pull the trigger now on your home purchase, you want to make sure you're looking at that list for a lender who's also participating in the Golden Opportunities Program. Next question, if I work in Yuba County, can I utilize a lender from Sutter County? Yes. Short answer is yes. It doesn't matter. You can use a lender in Los Angeles County or, San Bernardino County. It really doesn't matter as long as they are participating in this program and represented as a participating lender on our website. Again, I want to emphasize that location is not the most important aspect of your relationship to your participating lender. It's the service you want to focus on. Another question that snuck into the chat, the program is only available to county employees, correct? The Assist to Own program is only available to county employees of the 40 GSFA member counties. And we do have a detailed list of those counties on our website. And you'll also get a copy of the slides, which give you the map of California. All the counties highlighted in orange there are eligible. Now, I will say that even though you do have to be a county employee to take advantage of this program, I'm a GSFA member county employee. If you go on the application with someone else who isn't, that's perfectly fine. Not everybody on the loan application has to be a Yuba County employee. As long as there is at least one eligible county employee on the loan application, anybody else can join you on that application. Okay. All right. So I am not seeing any more questions. I will give it another minute or so to see if we get any more questions. Again, no pressure to stay on the call. If you've got to run and you don't have questions and you don't care about other people's questions, feel free to log off and enjoy the rest of your day. But if you do have more questions, go ahead and drop those in the Q&A box on your webinar toolbar. Just click on Q&A. It'll open up a dialog box and I will see your question there. Question, does it matter which realtor we choose? No, it does not. We don't have a list of participating realtors. We only have a list of participating lenders. So you want to make sure whatever realtor you choose is competent and able to meet your standards in terms of what kind of home you're looking for, the area that you're looking for. It's really important to make sure that the realtor that you work with is experienced, right, with the locale and the type of home that you're looking to purchase. Um, yeah, and that they have relationships with lenders that can provide this program with you. Sometimes that helps as well. And again, we still have some time for questions. If you have any, feel free to go ahead and drop those in the Q&A box. It does look like the chat is activated. So if you have a question, you're welcome to drop your comment in the chat box as well. And I'll hang out for another minute or two to see if we get any other questions. Okay, I'm not seeing any more questions come in. If you think of a question later, you're welcome to reach out to me or my team here at GSFA to support. Again, our contact information will be in your slides, which go out to you within about 1 to 2 business days. And the recording from today's presentation will also be available to you within about 1 to 2 business days. So with that said, I want to thank everybody for joining me once again today. And we wish you the best of luck on your homeownership journey. Take care.